Welcome to the May 2013 Cambridge House Investment Conference. I'm Tara Sweder, corresponding for SmallcapPower. Today's experts, analysts, and research reporters will be answering all your questions about what is going on in the world. From China to resources, we have it all. Stay tuned. We have Keith Shaefer here to talk about the stunning turnaround in oil prices in Canada.
Yes, the last 5-6 months, nobody would have guessed last Christmas that we'd be where we are now. Last Christmas, we were selling our oil down into the U.S. for probably $40 to $50 a barrel less than international prices. But two things have really turned around right now. By far, the biggest thing has been rail. We have been hostage to the American refineries, specifically the ones in the middle of the country over by Chicago. They buy most of our crude oil. But now railroads are transporting so much of our oil all over the U.S. to their refineries up and down the West Coast, the East Coast, the Gulf Coast. So that's created a lot more competition for our oil. So our oil price has gone. Our heavy oil price last year at Christmas time was under $50 a barrel. Now it's like 75, sometimes closer to 80. So that's a huge increase in profitability for the Canadian industry.
Now, I heard somewhere along the lines $30 billion in losses for Canada alone. Does this correspond with Asia at all?
Well, yes, because and I think that $30 billion is going to get a lot less. So that $30 billion was like last year when our oil prices were really low. Now it's probably only more like $15 billion or even $10 billion. So we're not losing near as much because of the big increase in prices. But the big news now that just happened last week in mid-May was with the BC election. Now the Liberals won, the centre-right party won. So we are going to see an oil pipeline to the West Coast now. Might not be the Northern Gateway by Enbridge, but certainly we are going to see one of the several options being considered happen.
If you're investing in gold and silver and junior mining stocks, take a look at oil and gas. We have Eric Coffin from HRA Advisories. He's been in the industry a long time, and today he found it pertinent to talk about companies that have potential for discovery. So what were you telling investors today?
I think what's happened in the last 2 years with essentially the junior bear market, if you will, it's a senior bear market too. To me, this feels very much like the old days. I think we're going to have an old school market here because I'm not expecting huge increases in commodity prices. You can't be buying these things on the expectation that the gold price or the silver price or the copper price is going to do the heavy lifting for you. I think you need to find companies that have the capability to grow their resources very rapidly, which is just a long-winded way of saying a discovery company. Discovery companies, when they initially find something, if they find something that looks really good and the market gets excited about, the market doesn't care what the metal price is that day. Like if it's a gold discovery, it doesn't go up and down every day based on the gold price. It goes up or goes down based on whether people think the discovery is going to get bigger. So I laid out basically 3 or 4 companies I follow already, and they all sort of had 3 things in common. Targets that I really like, okay. A lot of cash, which was important because this is a very tough financing market. So I've tended to stick to companies where the work they're planning to do to try to make a discovery was still going to leave them with enough money that they were still trading at or near cash, which basically means there is no discovery premium yet. So if they don't hit on those drill holes, because let's face it, the odds of hitting something big aren't high, you're not going to get hurt that much because there is no discovery potential in them yet. The first company that I use as an example is one that I have talked about for a few months that did make a discovery last month.
Who is that?
That's Colorado Resources. It's gone from 15 cents to $1.50, one drill hole. Now I think the play, if you can find companies where management is strong, they know how to generate targets, they have cash. Part of the reason why Colorado traded so well is because, and part of the reason why I was talking about it before they drilled that hole was because they had $8 million. So the drill program they had designed before they made the discovery was only $1 million. So they were still going to be trading below cash. The truth of the matter is the market is just as horrible as everybody thinks it is. I think the number of exploration companies is going to get cut in half, maybe more. I'm actually happy about that. I think there's way too many companies out there basically doing nothing.
It looks like it's doing so bad, but maybe it was a little bit flooded.
There's way too many companies. I mean, the the markets, the guys that run the exchanges, they set up this thing called the CPC system, and that's essentially you're listing a shell company, and then you go looking for something to do. And the combination of that and failed exploration projects, there's probably somewhere between 1,500 and 2,000 companies out there right now. I mean, if you were going to be really optimistic and really polite, there might be enough interesting projects and targets and really competent exploration management teams for, I don't know, 600-700 companies maybe.
Right.
Like 2,000? No way. I mean, there's way too many companies. And that's part of the drag, because if you think about the average year, what does it cost to rent the office, pay the lawyer, pay the auditors, yada, yada, yada.
It's expensive.
So if you've got 1,000 companies that are essentially not accomplishing anything, there's effectively a couple $100 million a year getting pulled out of the sector to support phone companies and landlords, which is all great. I have nothing against phone companies or landlords, but I would prefer to see that money go to a smaller group of highly competent, experienced people that have good targets where the odds are just way better. So as far as I'm concerned, 1,000 companies go under, bring it on.
Always make sure to do your own research. Subscribe to Small Cap Power. For now, I'm Tara Sweder.
Get more investing advice from our roster of experts, including Rick Rule, Mickey Fulp, Eric Coffin, Brent Cook, Steve Baumer, Tom Calandra, and James West by visiting smallcappower.com/experts. Smallcappower.com, investment ideas and research.